Welcome to Trading Lounge and the European indices for the 12th of January. We'll be covering the DAX and the Footsie, and on the DAX here, the weekly chart here, we can see that we're on these old tackling these old highs here on the weekly. It's a little bit positive because we've got this major trading level here at 13,000 becoming well, a bit of a support here rather than a resistance here. How far can it push up? I'm not sure. In terms of counting this, we can look at this as wave 3 over here with a nice A, B and C wave over here for wave 4, and it is possible that we can go from wave 4 here to wave 5 here and be completed here at this point. I don't think that's the case, but it's possible. And I say it's not, I don't think it's the case because I can see with stocks like Amazon, for example, that are still going through a sort of a large wave 4 correction and still should have more upside. But I've got to point these things out. So looking for 5 waves from this low here up to here, it can be counted as basically 1 and 2 in here and 3 and 4 here, and going up for 5. This 5th wave here is not that easy to count, but if I count it in a very conservative manner, that means like not going so far up here, but the absolute minimum, then we can have a top in here, and we need to talk about that today. It's also possible to count this up here as wave 1 here and back for wave 2 here. I don't think it's the case because it wouldn't be in line with other markets around the world. Counting it as 5 waves up here for wave 1 here and coming back for wave 2 would be more in line with what's happening around the world, even through Asia and the Australian dollar and those sorts of things. You know, but a lot of these markets that have moved up from the March low here, we can count them up as moving up as 5 waves. So yeah, so look, I think the important thing here is that we keep an open mind. We don't get fixed on one particular count. We stay within an intraday wave count that we do understand, and we can trade setups within that particular structure. So even though we don't understand the bigger picture, we can't confirm the bigger picture in a positive way, and it's left the door open for a variety of counts, we can work it with the intraday count. So moving into the daily chart here, as I mentioned, we can count from the low here. We can count it as 1 and 2 and 3 and 4 and 5. I kind of like that because it's in line with the NASDAQ and other markets around the world. But it is possible to have this as wave 1 here. It doesn't have to be the same as the DAX, same as the S&P 500 and so on, and wave 1 up here and wave 2 here. So in counting this up here, there's different ways to count this as well. So a conservative count would be 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 for the 3rd wave here, and ABC for the 4th wave. And then from the 4th wave to the 5th wave here as 1 and 2 here and 3 and 4 and 5, and finished here as we were looking at this yesterday here. So wave 3 over here, wave 4 here, then wave 1 and 2 here, and 3 and 4 and 5 finishing here. It's also possible to count this from this low here, count all this all the way up here for wave 3 up here as well. Having all of this as just 5 waves up here as 1 and 2 here and 3 here, an A and a B and a C here for wave 4, and then up for wave 5, leaving all of this just one leg here. So that's also possible as well. But like I said, I wanted to take it in the most conservative manner to the upside. So based on that, I've got to consider what a top would be in here. Now we'll take a closer look at this on the tick chart so we can understand. But in a nutshell, before we do that, it's possible to count that down here as 5 waves. So we can look for a little ABC pattern coming back up here, and then another 5 waves down at that point. Now the reason I'm saying this for is because as a corrective pattern here, it's okay to have 5 waves here, a correction here, and then a 5 waves down here. So once we've got that ABC pattern there, right, then anything below that would be bearish at that point, below that below that 535 structure. But if that holds there, then that becomes a long trade back up at this point, and then up we go from that, up from that point, up from there. So we might as well just go in and have a look at that on the tick chart, I think, just while we're here. Let me just get in a bit more data here. So we're just sort of focusing in on the top here for this. This is 100 ticks. So let me just get a bigger picture here for this. So from here, if we look at this as wave 1 here and 2 here and 3 here and 4 here and 5 here, then we've got 5 waves. So we can look at it as wave 1 here or wave A. And then I can also count 5 waves up into this space here. So we could look at this as an A and a B and a C wave, a 3-wave move here. The 14,000 or just above that is the 50-60% retracement level. So from that high to that low, that's a 62% retracement level here. So it's possible to see this as some sort of A, B, and C up to this point, and then drop from that point there, and have another 5 waves down into wave C here. But what I was mentioning here is that once this 5 waves finishes here, then anything below that, anything below this point here, then that becomes bearish at that point. So technically what I'm saying here is that, well, technically below that will become bearish at that point. So any move below that would be bearish. Otherwise, this could be viewed as an A wave, a B wave, and a C wave here. So what we could also say too is that, well, Pete, what about if you've got this wrong here and this move down here and it's actually corrective? Well, then I would have to say that I would need to see the market have a classic trading levels pattern sitting on top of the 14,000 here. So the first high above the level would be the important price point at that point. So you could go long at that point. So I'm just saying that because this would be, getting that first high above the level there, that would be above the 61.8%. So you could go long at that point. So that really takes care of the long position. You can also look to add up here as well for that. So that takes care of the long position. The short position is a bit of a rock and a hard place because, well, do you short it here? If you're going to, that would be the place to short it. And if you had confidence, if you could count this 5 waves down here and you were confident and you pulled it all apart, and then you saw this in 3 waves here, then you could actually short the low of wave B, because the low of wave B would confirm that the move up here is corrective. Because I know that's 5 waves from here to here. I just don't know if wave B is over, so it might come back down here first and then go up there. Do you know what I mean? So then you'd need that low. But that low of wave B there, that's the one that you would want to be shorting. That would be the confirmation to short. And you could also probably just draw a line through that there as well. So just drawing a line through the bottom of wave B there and look to short that. But that technically, that wave B would be the catalyst to confirm that you would have 5 waves here and that you would be going lower. But how far that actually gets you is not that far. So I had to answer that phone, but I forgot where I was up to with this. But anyway, that's kind of where it's at with this. So we can look at this as the A wave here, the B wave coming up to here, and the C wave down to here. So it may come further down from that point, shorting the low of wave B out, wherever that comes in, because that might just be an A and a B and a C and come down here further, but that would be the point to short it at that regard. There's also, I do have a count that takes us further to the upside. Which is this one here. So that's why we just need to be careful. So if we look at this, all of this is wave 1 and 2 up to here, and then look at this as wave 1 and back for wave 2 at this point, and then moving up to wave 3 here. So we'll pick this up tomorrow. We'll just see how this plays out here for this here. Yeah, I really don't know which is the right one, and which is which. Here we just need to just give it a little bit of time, but it's quite normal for this has hit 14,000 now, and it's just doing all the normal things really. It's the arrival, the reaction in three waves, the first high above the level to come into play. So yeah, and the S&P at 3,800, the Nasdaq at I think it's also at 13,000 as well. Everyone's working through these large numbers. So we'll just give it a session or two, and we'll pick that thread up. When I look at the FTSE, it's a bit more bullish as well. So from this low down through here, I can count this quite nicely up here for wave 1 sitting on this point here, where in most other cases we're looking at wave 3 and 4 here, but say 1 and 2 here that I've been looking at, and then 1 and 2 here, and then moving up for wave 3 here. So in this case, 1 and 2 here, and 3 here, an A and a B and a C back for wave 4, and then up for wave 5 here. For wave 3, then 4, and then 5. So this has still got further to move up here. But the FTSE can be just pulled around by other markets. So we need to be a little bit mindful of that. So it could just get crushed at any point. So we'll just take a closer look at this. We had long trades on, but we've been stopped out. So long trades were down in this space. And looking at from wave 2 here as 1 and 2 and 3 here, an A and a B and a C here for wave 4, probably another little low to come in here. So we've been stopped out, we had the stop there. So, but still we should see, we should still see this move up into wave 5 here, and then some type of ABC here, testing that demand and resistance at 7,000, and then wave 5 to the upside here. But once again, let's just see. I've got this green trigger sitting above that little high here. I'll just leave it there for the time being, because they're going to be softer overnight. They're going to be softer anyway. So let's just see. So let's see if the S&P 500 and NASI and all that just firm up in this current space here first. I mean, the main point takeaway here, I guess, is that from this low to this high, and I'm just going to go to the second high here, really, we wouldn't want to see the market drop below this level here, this 61.8%. Then it would be pretty much at that point that the market would get, well, yeah, I mean, it would be overlapping wave 1 at that point. So it can be here as wave 1 and back for wave 2, up here for wave 1 and back for wave 2. That's what I'm allowing it to do. But beyond that, it's not a good look at that point. So it's still bullish while the 6,700 remains, as these highs remain as the support for this market. So let's just give it a bit of time, and we may be able to get a better entry into, lower in here once we see this play out a little bit further. Alrighty, I'll leave it at that. Thanks for tuning in. Cheers.